Hello and welcome to our special coverage on Q2 results. I am Vivek Mittal and today we are joined by Mr. Ramesh, Kalyanaraman, Executive Director of Kalyan Jeweler. Welcome to our show, sir. Firstly, I would like to congratulate you for fantastic numbers again. हम देख रहे थे सर कि रेवेन्यू में 27% का जंप देखने के लिए मिला इस क्वार्टर में और वाई एंड प्रॉफिट में भी अराउंड 27% का ही जंप 106 करोड़ से 135 करोड़ का प्रॉफिट. सर क्या कुछ की हाइलाइट्स थी इस क्वार्टर की?
Quarter was good. Q2, as you rightly said, revenue bhi acha tha, and PAT also has grown. We have added lot many stores in the H1 of this financial year. Q3, as we speak, has also been good because the first 43 days, the revenue has grown at around 35%, which is also strong. Good footfalls in the store, good momentum across all the stores in India. So we are really looking forward for a good Q3 as well.
Because we have seen that this Q3 is quite related to Diwali and marriage season. So you have just seen the Diwali sale, and now what kind of sale you are anticipating in the marriage season, sir?
So as we speak, it is still strong. And again, there are a lot of weddings which is going to happen in November, December. There might be a few revenue which has already been absorbed in the first 43 days. But we feel that it should be strong. And of course, 35% revenue growth in the first 43 days should not be a guidance for the next 45 days. But momentum should be strong, is what we feel.
In this Q2, we have seen that there was a little bit of pressure on EBITDA margin because we have seen that the kind of sales you have generated in Q2, even in Q1, but there was no as such growth in EBITDA and EBITDA margins. So what are the key reasons for this, sir?
Pressure which you see in EBITDA margins is as per our plan, because we have moved into FOCO model franchising where the gross margins will be on a lesser side than our own store. And the expansion has been completely driven by franchisee partners. So you will feel pressure on the EBITDA margins, which is as per our plan. The area where we should see is more into a PBT margin rather than an EBITDA margin, because EBITDA margins are going to keep on coming down over the years, because as we speak, 20% of the revenue is coming from franchisee, approximately, which will in the couple of years be 50-50. Wherein our EBITDA margins for franchisee stores are in the range of 5%, whereas our own stores in the range of 8%. So in a couple of years, the EBITDA margin should be in the range of 6.5 to 7%, because the major reason being the revenue coming from franchisee. Otherwise, on the store level, there is no pressure on the gross margins. It has been, YOY has been almost similar. The only additional expense in the last quarter, if I may say, is the employee expenses in the range of 5 to 6 crore, which is predominantly for the employees who are going to work in the stores which we are opening in Q3, because we were adding quite a number of stores in the Q3.
Indian business is contributing higher in terms of profitability still. Like we have seen that the Indian business revenue was 375 crore and profit was somewhere around 186 crore, while the Middle East and other region revenue was 629 crore, little down compared to last quarter, with contribution just 12 crore in PAT and versus 17 crore in PAT in the last quarter. So can you tell us the reason for this, sir?
The Middle East has contributed around 15%. Okay. And you will see that the Middle East revenue growth was only 5% in Q2. That is because of a base effect wherein the last Eid holidays came in Q2 last year, wherein the base was higher. But if you look at Q1, our revenue growth was 21%. And if you look at H1 Middle East, the revenue growth is around 13%. And everything has almost been SSG, because we have not added too many stores in that region.
Sir, how's the impact of geopolitical risk on gold price and its overall impact on the jewelry demand in India now?
Yeah, so when the gold price is very volatile, people take a pause. When it goes up very quickly, when it comes down very quickly, people take a pause and they will take some time to decide whether to buy now or in a future date. Demand is not going to go away, but demand can shift for a couple of weeks or maybe a couple of months, maybe when it's very volatile. And even with this high volatility for the first 43 days in Q3, even with more number of Shraddh days in Q3, the revenue has grown by around 35%, which we believe that is very strong.
Okay. We have seen that in Q2 there was a surge in your advertisement expenses. Now, how was this quarter like? What kind of cost you have just incurred on advertisement side?
Advertisement we keep in the range of what 2% of our revenue, and that varies upon if, for example, Q3 last year, the advertisement, because it was very early Diwali last year, so we started our campaign in September itself in the last year. This year Diwali was only in November, so we started only in October. So it can vary about what minimalistically between quarters, but ideally it should be in the range of 2%.
Okay. And sir, how many new stores you have just added during this quarter? I'm not talking about the H1. During this quarter, how many stores you have just added?
So you are this quarter. This quarter means Q3. Is what you are asking.
Q2 I'm talking about.
Yeah. So
Like in September.
I understand. So Q2 we opened 13 new showrooms.
Okay.
Q1 we opened 12 new showrooms. Q3 as we speak so far we have added 16 new showrooms. Right. And we will be opening 9 more new showrooms in Q3 and 12 to 15 more showrooms in Q4. So the total number being in this financial year approximately 65 new showrooms, whereas the earlier plan was only to open 52 showrooms, but we believe that it will be 65 in this financial year, 2 being in Middle East.
So it's franchise based or it's company stores?
So the intention is to open all stores as franchisee, but when there's some technical issue for a franchisee partner to step in immediately because of some GST issues, because of some financing issue or something, then we step in and open the store and then convert it to a franchise. So the intention will be to open all the stores through franchising.
Okay. So what kind of margins you enjoy while opening any store through franchisee, or what kind of margins are there if you are opening up your own stores?
So it's a revenue share, margin share, which we do with franchisee partners. It comes lesser than our own store. Okay. When you come to an EBITDA margin level, own store will be in the range of 8%, and franchisee store will be in the range of 5%. And so what are your plans for overseas growth? Because we have just seen, as you have said, that the Middle East region is contributing just 15% of your top line. So what kind of plan you have? You are opening up some new stores, or you are just going some other geographies? What are your plans? Yeah, so of course that 15% will be always in that area because India is growing faster than Middle East. Exactly. Okay. And India is bigger than Middle East. We are an Indian brand, and our intention is to grow in India. But we have now opened the first franchisee store in the Middle East in the last quarter. Okay. And we have signed 5 new LOIs for franchisees in the Middle East. And okay, out of which a couple of stores, 2 stores will be opened in this financial year.
And so what are you plan for e-commerce division? Can we expect it to be in profit this year?
So e-commerce now, what we want to say is that it's now becoming more of what we call digital first brand, wherein physical stores are being opened. We already added 2 Candia stores in the last quarter, and we will add more number of stores there. There is a new customer segment which is being built in that space. It is a very homogeneous expansion, where in Kalyan Jewelers, we compete the unorganized segment, we compete regional players, we compete national players. Each region behaves differently in terms of product composition, etc., margins, etc. But Candia is more of a homogeneous growth. Growth can be faster than Kalyan, but we want to demonstrate Candia and then talk about it. And so give us some 6 to 9 months wherein we demonstrate something on Candia, and then we would like to talk on Candia, because we don't want to talk more and do less in terms of Candia. So we were talking about some new stores. So what kind of growth is there in a new store and same store? Like what's the same store sales growth, and what's the
difference between your new store growth?
Yeah, so same store sales growth in Q2 has been in the range of 10%.
Okay.
And Q1 has been in the range of 15%. As we speak, for the first 43 days, it is showing a healthy SSG as well. But we always tell people to look at a 5 to 6% SSG, which is healthy. But on the ground, of course, we are getting more. But the better way to look at it is 5 to 6% as a guidance, but not more than that. On the ground, it's much more than that as we speak.
Okay. And sir, where do you see gold price? Because many of our clients are watching this show and they just focusing on what the Kalyan jeweler says about the gold price, because they are just scared that the gold price has touched 60,000. So they should buy at these levels to hold the gold for a longer period, or they should wait to buy gold for a longer period.
I also wish I can predict, but nobody can predict the gold price.
Exactly.
The only thing which we can say is that on a long term, gold has always been a good asset. People have always enjoyed a good what you call return from the commodity, and people buy at what price which is available they can buy. It's always an asset. It's a liquid asset which people can buy, and on a long term, it has always given good returns to them.
Okay. Sir, last question. What's your debt position right now?
So that we reduced debt by around 116 crore in the H1, meaning in Q2. And we have a debt reduction plan. We will reduce the debt by around 15% of the gross level in this financial year. And today the gross debt is in the range of 3,300 consol and 2,300 in India. Ideally, it should be in the range of 3,100 before the end of the financial year.
Perfect, sir. So we hope that Q2 will be better than the Q2, and rest of the year you will be giving a fantastic growth, and wish you all the best for your H2, and congratulations for Q2 results as well. Thank you very much for your precious time.
Thank you.